afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Ken Shreve here with a look at the action in today's session. And as expected, there was quite a bit of volatility related to the Fed news that came out not all too long ago, kind of shaking things up in this early rally, Ken.
Yeah, well, you're right about the volatility. I think everybody was expecting some volatility after the Fed statement at 2 p.m. Eastern time. I mean, the Nasdaq was up more than 3% at one point today. It gave back that entire gain, showed a sharp loss soon after the Fed statement, and it looks like it managed to close about break even, mostly flat. But yeah, I mean, just the Fed statement. They signaled probably the first rate hike in March. They're going to end their tapering program, the monthly bond purchases. They're going to end that in early March, which will pave the way for a rate hike. The market did seem to sell off when the press conference started, and Fed Chairman Jay Powell said that we have plenty of room to raise rates without causing a shock to the economy or the job market. And that's when the market started to sell off, maybe thinking the Fed's going to be more aggressive with rate hikes. But yeah, so it's just market volatility is alive and well. And I think the session today showed us that it's still a very risky market out there. And we're not in a confirmed uptrend. This was the third day of a rally attempt. So it's good just to go slow here just I personally, I don't feel like I have an edge, and I think a lot of other investors, are feeling the same way. The volatility is just too much. It's best to watch from the sidelines.
Well, Ken, I know what your edge is, and that is recognizing that conditions aren't safe right now. So sitting out and protecting your portfolio when others are getting hit because they're trying to play these bounces. So I think that's your edge. And we're gonna take a look for canceling traders, right? We pay attention to the market.
Yep.
So we're gonna take a look at Microsoft, Matson, and ADM, Archer Daniels Midland. But first, let's take a closer look at the major indexes today. So here's a look at the NASDAQ composite finishing the day, as Ken said, right around break even, up less than 3 points today. On the downside, we had the Dow down about 0.4%, the S&P 500 down 0.2%, and the Russell 2000 down about 1.6%. So the NASDAQ here hitting some resistance at that 14,000 level. And I can pull up SPY, the S&P 500 ETF, and go to a 5-minute chart just to show the volatility that resulted after that Fed announcement. And this is why we had a strong open. That initial reaction to the Fed was also positive.
Yes, it was.
But you can't just have a knee-jerk reaction when you see things like that.
Yeah, exactly right. I mean, the major stock indexes held really solid gains for a good portion of the session, and then at 2 p.m. Eastern, the Fed policy statement came out. We actually moved even higher from there. We're saying, okay, well, third day of a rally attempt. We were looking at volume. It sort of had the feel of a follow through day and confirmation
for a couple minutes.
For a couple minutes, yeah. Yeah, so the volatility is just tough. If we can just go to a chart of the S&P 500 itself, not SPY, but the S&P 500, and this is an index that went right up, just like the SPY did, went right up to its 200-day moving average and got turned away. So when you're under a lot of pressure like the S&P 500 is, sometimes these support levels, the 50-day, the 200-day line, can turn into resistance, and that was certainly the case, at least with the 200-day line today for the S&P 500, got turned away. So listen, we know where the leadership is. Oil and gas stocks continue to do well. Even many of them reversed sharply lower today. Here's the XLE, gave back an early gain, still holding above its 10-day moving average, so no real technical weakness here, but a lot of stocks did give back early gains.
Yeah, and that resistance at the 200-day line for the S&P 500 was something that we were noting this morning on IBD Live. Of course, the Fed statement, a bit of a wild card there, and we have more earnings reports to come. Ken, this week is a very busy week for earnings, and Microsoft was sort of that glimmer of hope overnight and early this morning with its strong report, solid numbers on both the top and bottom lines. But that's not what really moved the stock positively. It was the outlook for Azure, the AWS, the cloud services business, basically.
Yep.
So Microsoft finishing the day up less than 3% after I think a gain of 6+% right out of the gate this morning.
Yeah, I mean, I think this is just an indication of an unhealthy market, because this was a very solid earnings report, 20% plus growth on the bottom line and top line, and the stock was down 4% for a good portion of Tuesday's after hours session, and then late in the conference call, the company said that their Azure cloud infrastructure business sales growth is expected to re-accelerate in the current quarter, and they also raised their sales guidance. But you can see there were just sellers in the stock today. It closed near its session low, still up 2 to 3% for the day, but and holding support at the 200-day line. But it was a good earnings report for Microsoft that was rewarded a little bit, but it sure would have been nice to see the stock close nicely above that 300 level.
Yeah, well, if it weren't for the Fed, that getting in the way of the stock here today,
Yeah, yeah.
but it is a long-term leader right around its 200-day line. So maybe if it can tighten up here, that might present potential entry for investors looking to get into a long-term leader. And if the
Yeah.
market can cooperate, of course, as well.
Yeah, we've had this stock for a long time on leaderboard. Initially, got it when the stock market bottomed in 2020, right in April 2020. So it's been a kind of a big long-term winner for us. So we're giving it some room here, hoping that support is going to hold here at the 200-day moving average. But yeah, I mean, the market is just very very iffy right now. We've seen a lot of certainly a lot of distribution, and on IBD Live and on these videos, we've been talking a lot about the damage done to a lot of different stocks. I mean, we do have our leadership in the energy sector, but there's just a lot of technical damage that's been done to the market that might take some time to repair.
Mm-hmm. And now let's take a look at MATX in the transportation shipping group, up over 3% for the day, but off its highs. This is a stock that gapped up last week, pulled back in, now retesting this breakout area, but that relative strength line it's hard to see a relative strength line that is that vertical over the last couple of weeks.
Yeah, I mean, this stock traded over 98 at one point today, and nicely above the 93.28 buy point. But yeah, you can see it gave back gains with the broad market. Still managed to close higher by around 3%. Outstanding fundamentals here, and you can see several days ago when the stock really gapped up powerfully, they gave very very bullish guidance for the fourth quarter. We're not going to hear from Matson for about 3 weeks or so. Maybe even a month when they report earnings, but they gave very bullish guidance for the current quarter. So we still are optimistic that shipping stocks can maintain their leadership, and Matson's still holding above a buy point here, and in a confirmed uptrend, you want to look at stocks that are clearing buy points like this, breaking out of bases. But when you're in a market correction, sometimes these breakouts can be a little challenging.
Yeah, they can, which is why being mostly in cash and on the sidelines is a great idea. But if you do want to test some buys with stocks in areas that are bucking the downtrend, going with a smaller position size and making sure you're keeping a tight leash on them is a good way to go.
Yeah, we've done a few little pilot kind of pilot buys for leaderboard lately, but we still have a pretty healthy cash position, so increasing exposure by just a little bit here and there, we still think we're managing our risk pretty well, and hopefully the names that we've added recently are gonna work, and if they don't, well, we have a sell discipline, and we'll know when to get out if we need to.
All right. Yep. And let's also take a look at ADM Archer Daniels Midland. A strong close, it looks like, up almost 6%. Some strong volume behind the move for this food and grain stock. So, agriculture, whether it's chemicals or this area of the market as well, is in favor right now. And ADM showing that in a big way today.
Yeah, and I mean, looking at the daily chart, the stock might look a little bit stretched here, but if we switch over to the weekly, it still looks like it's in range to me. I mean, you can see it's still in the early stages of trying to break out of this really long consolidation. So you're not looking at a stock that has rallied 20, 30, 40% from a buy points way extended. It's still kind of in the early stages of a breakout. I particularly like the action right around the 10-week moving average this week. You can see a good, strong bounce off the 10-week line. Volume already, because of a strong earnings report, is going to be higher than last week's volume. So I think the stock still looks good here, and not too many stocks, Ali, closed near their session highs today. The bulk of them got pulled down right with the broad market, but Archer Daniels Midland was able to hold a strong gain throughout the session. I think the weekly chart looks great. Relative strength line poking into new high ground, and you look at recent revenue growth. This is a company that is doing very well.
Yes, it is. And it's about 7.7% above the 10-week line. So definitely not extended from that perspective either, Ken.
Yep.
All right. Thank you so much for your insights today and for everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So make sure you join us for another juicy discussion about current market conditions. We'll have to see what tomorrow brings.
I'll be there.
Yeah, Ken will be there helping the crew out. So we hope you join us too, investors.com/IBD Live. We'll see you there, and we'll see you right back here tomorrow after the close.